It's 7 o'clock, so we need to make a start. Thank you. Welcome to this meeting of the Audit and Risk Committee. Welcome to officers, external audit, and anybody listening via the Zoom webcast. Do we have any apologies, Tom?
No apologies this evening, Chair.
I think there's just Laura Lynn from Grant.
Sorry, no apologies from members to say members. That is.
Thank you. Okay, thank you. Declarations of interest. Do we have any declarations of interest this evening? Councillor Stevenson.
Yes, I have another registrable interest. If you could correct that into proper English, Chair, I'll be most grateful. I was on the Cabinet for the 21-22 accounts.
Yeah. Thank you, Councillor Stevenson. And I also need to declare that I have a non-registrable interest because I was the portfolio holder for the 21-22 accounts. I have been advised by Democratic Services, though, that has no impact on the discussion. We are able to participate, vote and remain in the room. Thank you. Anybody else? Any interests? No. Do we have any deputations questions to come in, Tom?
Not received, Chair.
Thank you. Do we have any questions with notices from members?
None received, Chair.
Any notice of motion?
None received, Chair.
Thank you. Right, so moving on to agenda item 6, the substantive item of the agenda, the statement of accounts. Is Andrew or Kirsty going to present? Right, thank you. Thank you.
Thank you, Chair, and evening all. So this is indeed representing the 21-22 statement of accounts. In previous audit committees, we've either given you a verbal update or update as a report as to the progress with the audit, with this night in mind about actually finally signing them off following the audit. So tonight, and you'll, I'll go back a step. You'll remember as part of those audit updates on the statement of accounts, we've had some local issues with regards to asset valuations that were resolved. Because they were still open, then we had the more national issues that impacted us as well on infrastructure assets, the valuation of those, and then more latterly the pension triennial valuation that was impacting the balances in our balance sheet as well. So there has been a string of areas where, because the accounts have remained open, it caused further delays with getting to this point tonight. In terms of what's on the agenda and with this report, we have the statement of accounts, the 21-22, the annual governance statement, and also the audit finding as well from what the auditors have looked at as part of their plan for the statement of accounts, and the impact from that and the management actions coming out of there. So they're the 3 key appendices. The other item to draw your attention to is noted in 3.2. There's a further change that we need to consider and make the amendments to with regards to the section 106 balances. So these were shown previously in the reserves, and to better reflect the commitments that we have with regards to spending those funds, we've in effect moved them to the creditors element of the balance sheet. So still in the balance sheet, it's just reflecting the obligation that we have with regards to those funds better. That was a change that we made in the 22-23 accounts, but because the 21-22 accounts are still open, technically we need to go back and make that amendment as well. So I'll pause at that point, and Andrew and Paul, if you've got anything further to add.
So I think it's probably worth if we go through my audit, well, not my audit findings, our audit findings report, because it just kind of concludes in it. As Kirsty said, there is one bit that's still outstanding, which is the correction of the section 106 from the 22-23 accounts, just to reflect that in 21-22 accounts. So if we go to page, I think our report starts on page 129 of your pack. So the work is substantially complete. We have completed all of the work apart from the new issue that's arisen around the section 106 grant money. I won't go through the whole of the report in detail, but perhaps the good bits to go through are on, just get down to that page, is the appendices. So that is on page 148. So we have through the audit, we've made 3 recommendations, 2 of which we've assessed as medium risk and 1 as low. We've sought management responses to those. I don't think there's anything big issues in there, and the responses that management have provided are reasonable. The one on the journal authorization, although the answer is not best practice, we accept what management have said given the size of the finance team. It's not practical for them to get independent authorization for all of them. Appendix B is the audit adjustments. So there's 3 audit adjustments that have an impact on the figures within the accounts. The first one's around PPE valuation. So if you recall, when we first received the draft set of accounts, there weren't any revaluations in the accounts for 21-22 because management weren't happy with the valuations that the valuer had provided and were challenging those values. So they took the prudent course not to include them. On receipt of after discussions, they received a values report that they were happy with, and they've made the adjustments to reflect those revaluations in the account. So although it's an audit adjustment in here, it's not an error, it's an adjustment that we were expecting. Similarly for pensions, so because of the revaluations issue, the audit went on longer than anticipated, and during that time, a triennial revaluation of the pension fund was undertaken at the end of the year. That gave rise to some adjustments in your share of the Leicestershire pension fund. So the adjustments here reflect that revised valuation report. Again, it was an issue that came up during the audit and we were expecting it, so it's not classed as an error. And lastly, the third one is just to say, to be confirmed, we're just waiting for what the section 106 adjustments will be. We're expecting it only to impact on the statement of the balance sheet, statement of financial position, and not your income and expenditure for the year. Disclosure emissions, as you'll be aware, there was also an issue around infrastructure, which was a national issue, which required quite a bit of work and some adjustments during the year. They didn't affect the figures that were in your accounts, but it affected the disclosures. Eventually, that was where the guidance from SIPA came, that it was just a change in your disclosure. So that's been reflected. We asked for the financial instruments note to be amended just so it met the accounting standards, but again, it was nothing significant. And then during the year, the expending and funding analysis was updated to include COVID-19 income and expenditure because you were reporting that separately internally. So your accounts in that note needed to represent your internal reporting. So COVID-19 was split out from the other services just to show that it was a separate cost centre. Appendix C, so go on to our fees. So the first column is our proposed fee, which we included in the audit plan. You'll see that there is an increase of £6,000. There was some reduction in the work on infrastructure assets compared to the price that we expect, the fee we were proposing to charge for that. In addition, the other 2 additions are in relation to the valuations, which was additional work on top of what we would normally do. And again, the work on the additional work on the triennial revaluation of the pension fund. Again, there's 2 grant claims that we undertake, which is the housing benefit assurance process and the certification of teachers' pension return. So at the bottom of that, it gives those figures there. They're not linked to the accounts audit fee, but we're required under auditing standards to report them separately to show that they're non-audit services and additional services we provided. And then Appendix D is our proposed opinion. It's quite detailed and wordy, but the basis is at the moment we are expecting to issue a non-qualified opinion. So it's a clean opinion, and it includes the VFM work that we've already done and reported to you. There's no issues that will reflect that in that opinion. And I think that's from me, but I'm happy to take any questions because there's a lot of information in that report. And it's the first time that a lot of you have seen that report.
Thank you. I don't know, committee, do we want to take any questions on the statement of accounts and the annual government statement first from the officers. Both of those documents had been seen by the previous committee and have been scrutinised by the previous committee. And adjusted, and certainly the annual government statement had some small adjustments as a result of the scrutiny by the previous committee. So I don't know if this committee has any questions.
Sorry, I beg your pardon. I read through this, and I'm a little bit embarrassed to say I've got no real questions of any sort.
Well,
Committee this evening.
you don't, it's not compulsory.
I know, but I do feel it says right here, I need to, ought to contribute, but I'm not entirely.
And it
sure
was,
I've got
it had
anything to
previously
read.
been scrutinised.
Yes,
so,
I think it was
yeah,
indeed.
yeah. Sorry, councillor Powell.
Could I just ask, and I hadn't been involved in the previous committee, for perhaps a bit more explanation of that adjustment for the developer contributions? I understand it's a balance sheet, so it just goes from reserves to creditors. How does that actually, why is that a better place to put it? And will that be in long-term creditors? Because obviously that money isn't owed to anyone specific. It will be to be allocated in accordance with the policy at the time. So, and also one of the things I did ask is that actually that we could be notified of the amendment. Have you got any idea what sort of figure we're talking about? So perhaps just a bit of additional background would be helpful. Thank you.
Okay.
Yes, thank you, Andrew.
So this isn't related to all developer contributions. This is relating to specifically Section 106 contributions. So obviously, the authority has two types of developer contributions it receives: community infrastructure levy and Section 106. So this is only relating to the Section 106 element, and it only relates to the Section 106 agreements that have an obligation where the council will have to repay if we don't spend the money within either a certain time frame or on certain specific infrastructure needs arising from the development. So there's specific clauses within the Section 106 agreements that will lead rise to the council having to repay that money if we don't spend it in accordance with the agreement that sits behind it. That's the main reason why we've moved it from a reserve to a creditor, because in effect, we're holding that money until we meet the obligations. So it runs alongside, and the accounting treatment that we have for all ring fence grants that we receive are treated in exactly that same way. We receive it for a specific purpose until we meet the obligation under that agreement. We can then release it into our balance sheet. So it sits better as a reserve rather than as a creditor rather than the reserve. It's just around when we can meet the obligation. Obviously, under a reserve, how you recognise the income you've received, it's as though you've got the money and you can spend it as what you like. You know, there are controls around it. It's a bit less restricted fund, so it's reflecting the nature of the money we're holding on our balance sheet better. The value is in 22-23 is around 5 million. Which is why it's material and why the auditors have asked us to put it into the 21-22 accounts.
Okay, no, that's great. That explains it. I don't think that actually came out in the report. It just talked generally about Section 106 developer contributions rather than that specific reason that you've just explained. Thank you.
Sorry,
Councillor Ross. Yeah.
Can I just follow up on the question that Rosemary asked? I would have assumed that it must be a portion between current liabilities and longer term liabilities. I can't see how it sits within current liabilities. But perhaps you can explain why that's the case, given the duration of these Section 106 over which they can actually be expended. But I think that was a question, Rosemary, that you were alluding to, wasn't it?
I think my main question has been answered, but I also supplementary said, would it be in
I thought
current or longer term? So
Thank you.
yes, thank you for.
I think you're right. It's a liability, so it needs to come out of reserves and sit in liabilities. I think it will probably be split between current and long term, depending on the conditions or the clauses. So if it's, say, for example, you need to spend it in the next 5 years and you have a date in 5 years' time, then it will probably sit in long-term liabilities. However, if you've had that money for a while and it's now you've got to spend it within the next year, then it will move into current liabilities. But also it depends on what the clause is and the conditions that are set around it. That's just an example of the time clause. There may be other clauses that mean actually it's a short-term one, like you need to build a roundabout before the development's completed or something like that, which given the timescale of developments can be quite short and maybe need to be used in the next year, or you're planning to use it in the next year. That might be also affect whether it sits in short or long-term liabilities.
Does that answer your question?
Yes, thank you.
Okay, thank you. Any more questions on the statement of accounts or the annual governance statement, Councillor Powell?
So there was a couple of detailed things that I did send by email. I don't know if they're going to be adjusted or what's happening with those. Thank you.
Thank you, Andrew.
Yeah, we've already made those adjustments in the accounts as part of the review process that we've got. So adjusting the table so that alongside your query, that will then tie in with the text above the table and the couple of wording changes as well that were put through. So any changes that were required, I have responded to Kirsty on, and we will be making those changes in the draft accounts, and they will form part of the auditor's final review.
So just to be clear, that the version we're looking at here hasn't got those amendments. So do we have to, in part of our recommendation, is it subject to minor amendments that needs to be made when we approve them?
Can do, just for surety, yes.
If everyone's happy with that. They were quite minor on that, just things on a table that didn't actually stack up and the thousands figures had gone awry. And I think that was the main thing for this year, and a couple of sort of comments that I felt in terms of explanation of figures that would be useful to take account of in future years.
Okay. Were they circulated beforehand? I saw them, but I don't think anybody else did. So maybe if you could circulate the answers to Rosemary's questions and then just confirm that they've been put in the document. And when we come to the recommendations, we can amend that. Yeah, then.
I'd suggest adding to the end of your first recommendation, subject to minor agreements, agreed amendments agreed with Councillor Powell prior to the meeting.
Okay.
And we can always amend those amendments to the minutes as well, append those to the minutes.
Do we need to vote on that now?
There isn't a motion before the committee yet. So
Okay,
when a motion is moved, that can include that minor amendment.
Okay, thank you. Is that okay, Councillor Powell?
Yes, that's fine. Thank you. I sent the email to yourself as chair,
Yeah.
portfolio holder, and to the strategic director. Thank you.
Thank you. Committee, do you have any questions then for Paul Harvey, the external auditor, on the comments in the Appendix 3? No? Councillor Powell, working hard tonight.
Well, yeah, I feel I need to ask some questions just to keep the meeting going for a bit longer. Sorry, don't minute that.
Thank you, Councillor.
Just interested on the journals, the comments on the control environment, and I think that's something that has been raised before with this authority, and interested to know, obviously you're accepting that it's not feasible to do those sort of extra level of approval on those journals, but you're happy that the sort of the procedures are being made. So I just wondered if you could say a bit more about that, because surely if a journal needs a second approval, it should be, there needs to be found a way that can happen. Thank you.
So yeah, so normally we wouldn't expect senior members of the finance team to post journals. So for example, we wouldn't expect Kirsty, it's the Section 151 officer, to post any journals. The head of finance, depending on the size of the authority, they may post journals, but we would expect them to be reviewed and approved and authorised by somebody else. Normally either the deputy head of finance or somebody like suitable within the finance team. So Yeah, we kind of accept it. What we've got in the explanations is that we just look at it from the financial system approach. So but that's what we would expect them to do. But from the explanations we've had from officers, there are other controls like budgetary control that operate outside of the finance system, which we don't look at and we don't document in detail, that are compensating controls for that. So if a journal was posted and it had a significant impact, it would be picked up by the budget holders as part of their budget monitoring and questioned. So there are those compensating controls that are around, which we accept this authority this size. We also tailor our journals testing to take into account. So any journals that Andrew posts, for example, as the head of finance and self-authorizes, they get what we call a high risk rating when we're deciding on what journals to test. So it's likely that we will pick up a significant number of self-authorized journals that we test to make sure that they're appropriate. And if we find any issues in that, then we'll expand the site, that testing, but we will also report back to you that we found these issues. So through the testing, we haven't identified any issues, but it's like a best practice recommendation that we would expect this to be implemented. But given the size of the authority, it's one of those that the explanation that you give that's been given by management is appropriate, but it might be one that continually crops up every year. But it's just so it's reviewed and you keep monitoring that you're happy with that response. So it might be that the finance team grows significantly in the next year, for example, and then it might be appropriate anyway. For example, but it's just something to keep on, just to keep monitoring, and just make sure you're happy with that approach. But I guess if we start finding issues with those journals that are self-approving, self-authorizing, then it might be then that you kind of consider, well, that response and that approach is not appropriate anymore. And then as those charged with governance, you might say, well, what else can we do? Is there another approach we can make or any controls we could put in place to mitigate risk?
Okay, thank you. Have you got a rough idea of how many of those sort of journals get posted a year? Because we shouldn't be talking about a lot of transactions, should we?
Andrew, thank you.
If I can,
Thanks.
the majority of the journals we're talking about are mainly accounting adjustments that we have to put through from an accounting point of view. So they are not affecting our management accounts. So it's things like the pension adjustments when they come through. So there are quite a few technical accounting adjustments. So we have quite a few on asset revaluations. We have quite a few on pensions, and financial instruments is another one. So that's where we have loans and investments. These are all adjustments that are done by the finance team in terms of, they're the controls really, and they're the big ones. They are all high risk areas for the auditors to pick up as well. So, for us, our valuation of our assets and our valuations on a pension fund are always high risk areas that are subject to additional audit controls as well. So as well as if I do a journal, it has to be processed, it has to be checked. The areas where we focus on are very much picked up by the auditors as well. So there are those two. In terms of numbers, I would say there's quite a few. Probably it's less than 100, I would say, from the year-end point of view. But there's lots of lines within there. So there could be 100 lines for the pension fund, for example. There could be lots because we have to journal to all of the cost centres. So there'll be lots of lines within them. But probably around 100 less than 100 journals will be processed around the year-end.
Yeah, Kirsty, thank you. Yeah.
Sorry to prolong this even longer, but one of the, and Paul's touched on this in terms of that assessment of the risk, and so what are the controls required to mitigate that risk. So, to my mind, Andrew's mentioned year-end accounting entries. That's one issue, but it would come out in the presentation of the balance sheet, for example. There are some areas of the balance sheet which I deem more risky. So, the bank, cash, reserves, control accounts with our sales and purchase ledgers, there are system controls within them as well. So there is almost like a grading of, where the risk is held, and the items that Andrew has mentioned. There are other alternative controls that we wouldn't pick that up, as Paul's mentioned. But equally, there are some accounts that you just don't journal into. There would be a lot of questions asked, and there are some different set of controls around them. So.
Okay. Right. Any more questions for Grant Thornton? No? Okay. So that moves us to the recommendation then. Tom, how do we handle that?
I would suggest, Chair, that a motion is moved to approve the recommendations on your report with the addition of the following text to recommendation 1, subject to the inclusion of minor amendments suggested by Councillor Powell before the meeting.
Okay.
And we will append a copy of those changes to the minutes as well for the public record.
Thank you. So with the changes that Tom's just outlined, the recommendation is that the committee delegates the approval of the statement of accounts for 21-22 in Appendix 1 to the chair of the Audit and Risk Committee in line with section 3. Plus the words.
Subject to the inclusion of minor amendments suggested by Councillor Powell before the meeting.
Thank you. Approves the annual governance statement for 21-22 in Appendix 2 and notes the draft audit findings report in Appendix 3. Could I have a proposer and a seconder, please, to approve the recommendations? Councillor Stevenson, Councillor West. Thank you. All those in favour?
Yourself, Chair?
Oh, sorry. I've done that.
That's
before.
unanimous. That's unanimous.
Thank you. Thank you very much. Any other urgent business? I've not been notified of any. The date of the next meeting is Tuesday, the 5th of December, when we'll have a full audit meeting. I just want to say thank you very much for coming out on a very damp Halloween evening to get these accounts moved forward. Thank you. Okay, meeting closed at 19:27.